Good evening and welcome back to Free Press TV. I'm Michael Patterson. Tonight, Wall Street is holding its breath. US stock futures nudged higher today, but the real story is what's about to come. Two crucial inflation reports that could dictate the Federal Reserve's next move and the direction of the broader economy. Here's where things stand. Futures tied to the Dow rose about 0.2%, while the S&P 500 and the Nasdaq inched up just 0.1%. That's a cautious climb, reflecting investors' growing conviction that the Fed will cut interest rates at its September meeting. On Tuesday, stocks hit fresh records after revised job numbers confirmed a slowdown in the labor market, exactly the kind of cooling the Fed wants to see. But the optimism is far from universal. Inflation, still running above the Fed's 2% target, is the big obstacle. And the next test comes quickly. Producer price data is due Wednesday, followed by consumer prices Thursday. Meanwhile, in corporate news, Oracle shares soared in after-hours trading despite a downbeat earnings report. The company's CEO projected a surge in cloud revenue driven by artificial intelligence demand. GameStop also surprised markets, reporting a revenue spike of more than 20%. Deep dive: similar moments in market history now. Let's put today's story in context. This is not the first time markets have bet heavily on a rate cut. While inflation loomed in the background back in 2019, the Fed cut rates 3 times to buffer the economy amid trade war concerns. Markets jumped immediately, though gains leveled off when inflation proved stickier than expected. In 2001, after the dot-com bubble, the Fed slashed rates aggressively. Stocks initially rallied, but the downturn in tech proved too steep to reverse quickly. And most recently, in 2020, the Fed's emergency cuts during the pandemic triggered one of the fastest market recoveries in history, though inflation roared back just 2 years later. The lesson: rate cuts often fuel short-term rallies, but history shows they don't always guarantee a sustained boom. Looking ahead, predictions and risks. So what's next? Analysts see 3 possible outcomes. The bullish case: if PPI and CPI both come in soft, the Fed will likely cut by 25 basis points in September, and markets could surge to new highs. The neutral case: if inflation cools only modestly, the Fed cuts cautiously, and stocks may tread water. The bearish case: if inflation proves stubborn, the Fed may hold steady, sparking a pullback in equities. History suggests that when rate cuts happen while markets are at record highs, as we've seen 7 times since 1990, stocks are still up, on average, 15% a year later. But that's an average, not a guarantee. Bottom line: Wall Street is balancing optimism against caution. Tomorrow's inflation numbers will either confirm the rally or shake it, and we'll be right here to break it all down for you. For Free Press TV, I'm Michael Patterson. Stay with us for continuing coverage.